Yeah.
Okay. Well, it's true. I have a background in frontier economies and I survived. So I'm here to share some of the lessons I learned over the years investing in places just like Guyana. I just want to start out with a key question. Why explore Guyana as an investor or a service provider? Um, and the top line answer is that Guyana clocked the world's highest real GDP growth rate in 2022, 62%. In fact, during COVID, its growth rates were really good as well. And the economy is set to expand another 30% this year and probably 30 or 40% next year. So that's growth from a low base, but I will share more stats about projections and impact and some nuance to that. In short, the numbers are going to be big in 5 to 10 years. And that's the time horizon for most people's investments in countries like Guyana. So, who should be interested in Guyana? And by the way, I'm not going to burden everyone with a slide deck. I'm just going to talk. And if you want to jump in, you could probably chat a question, but eventually I'll open it up to Q&A. So who should be interested in Guyana? The obvious answer is oil and gas industry and related suppliers, but oil revenues are going to create waves of regional spending and investment, including hotel and tourism, services like legal and accounting, air travel, marine services. There will be shifts in demand from lower value to higher value items. And Guyanese dollars are likely to find a home in the region. Investments in real estate, tourism, and then more traditional FDI in operating companies. I mean, the Guyanese, like you said, identify with the Caribbean, and when they accumulate wealth, they're probably going to stick close to home. So what I want to do is walk you through some facts and information that you can use to understand opportunities and risks if you're considering an investment in the country, or help you develop a plan to offer services in the country. This is just a distillation of a lot of information. I could go on for hours, but most people would probably drop off. So I'm just going to run through some of this and just try to get the most vital information in your hands in the next 20 or 30 minutes. So the most recent development is the one that I discovered after Alex and I decided to do this last week. It's literally minutes after we set the time and the date. I looked on Twitter and saw that Venezuela is stirring the pot over its border dispute. So I'm just going to say a few words about that, and then we'll just move on. So the origins of this dispute with Venezuela started in the colonial era back in like 1814. The Dutch ceded what is now Guyana to the UK, but the treaty didn't define a Western boundary. So in 1840, the British commissioned an explorer to survey and delineate the territory's borders. Now Venezuela disputes this line and claims that the border is actually as far east as the Essequibo River, effectively laying claim to 2/3 of Guyana. Most of the world's bodies recognize the existing border and reject Venezuela's argument for its claims. And I would point out that the claim happens to include most of Guyana's offshore oil and gas fields. Now, I don't know whether that plays a role in this, but there seems to be some domestic political matters going on in Venezuela too. So what I want to do is just level set on energy in Guyana. This is really exciting part for me. Having done this many times in many countries in the world. So I want to discuss more detail about the magnitude of revenues in the coming years and the fact that it's important to consider the country is yoking its future to a volatile commodity. And that comes with some obvious benefits and more subtle risks that potential investors should consider. The resource curse is a well-documented problem for countries whose economies are dominated by a single commodity. It looks like, from what I've read, Guyana is trying to address this problem, but I'll get into more detail in a minute. So it's a small country. Guyana only has 800,000 citizens, and until a few years ago, it had a 50% poverty rate. Its currency is the Guyanese dollar. The exchange rate is 209 Guyanese dollars to the dollar, but mostly um, the references to economic value I've come across suggest that it's a U.S. dollarized economy. Um, all of Guyana's oil and gas resources are offshore. This has some trade-offs. It's a technically challenging production environment, but the resources are insulated from the potential for disruption that terrestrial assets are vulnerable to. So, as an example, if Venezuela decide to cross the border aggressively, it's not going to interfere with oil fields that are on land. So the offshore fields could continue working theoretically, but I don't think that's going to happen. We'll see. So globally, offshore oil and gas development is booming. Most of the terrestrial oil discoveries have been made. And for Guyana, low break-evens and below average emissions intensity will take Guyana from a small producer to a global leader in the coming years. Not a global leader in total oil and gas production, but offshore. Despite reports to the contrary, global oil demand is still rising. JP Morgan forecasts that oil demand will reach 107 million barrels a day by 2030, and that's an increase of 5.5 million barrels a day from today's levels. Now, this is an important piece to consider with Guyana, because offshore oil development is long cycle. So even if oil drops dramatically, say 30 or 40% from here, it is unlikely that oil production will stop. It produces light sweet oil, which is favorable, easier to refine into end products. And while it may diminish, a drop in oil will diminish the revenues, the CapEx is likely to stay the same or only drop modestly. It's just the nature of offshore. You can't just turn it off and go home and come back in a few years. It's more important to stay productive in these fields. So in just the very simple terms, 1 billion people in the Western world consume 13 barrels per capita annually. And the rest of the world's population, 7 billion people, consume 3. So in barrels per day, that's 1 billion people consuming 45 million barrels a day, and 7 billion people consuming only 55. The developing world will consume much more oil. Their intensity will rise. I don't think it's going to be an argument that they're going to listen to deny themselves access to cars, refrigerators, stoves, transportation. And just one last point on the level set. Oil prices peaked in 2008 at about $140 a barrel. So to achieve a new inflation-adjusted peak today would mean oil prices would need to rise to about $200 a barrel. So we're way below the peak price of oil back from 2008. And the reason this is important, again, is because whatever you want to do, whatever plans you're making in Guyana, you have to always keep in mind that this country is going to be yoked to oil. And oil is a volatile commodity. Its demand, supply and demand balance changes 1 to 2% a year. Even in recession, it rarely goes negative. The growth just slows down. But the price of oil, the spot market can trade 5% before 10 a.m. So the oil volatility day to day is pretty high, but we're likely in an oil super cycle that lasts decades. So I just want to develop a framework for action in Guyana, like just a way to approach methods I used when I was a structured finance banker inside a bank, getting senior debt financing for projects, oil and gas in Russia, hotel in Latin America, telecom, hydropower. You have to consider both the commercial realities of investing in a project and then also the political dimension. So the best way to do this is to separate growth from development at a country level. Development is really the human side of the equation, and growth is, you can think of it as the capital side. So making decisions and invest in developing countries involves managing risks in both of these and separating them before FID, final investment decision. For example, a hotel project with a 15% expected IRR is not viable if capital controls restrict repatriation of capital. So I'll walk you through a quick summary of this framework for Guyana. So on the human side, the human dimension, development is mostly qualitative. So in Guyana, gross national income per capita is $15,000 in dollar terms in 2022. It was $6,500 in 2019. Dramatic growth, obvious reasons for that. So that's the total amount of money received in a country, including remittances, divided by the population. And that's a figure the World Bank puts together annually. Infant mortality is just the number of infants dying before reaching the age of 1 year. In Guyana, it's 22.3 per thousand is the baseline. So 10 years ago, it was 30. So that's an improvement without the benefit of oil revenues. Oil revenues just started a couple of years ago. The Gini coefficient is a measure of inequality, and it ranges from 0 to 1. Guyana is in the mid 40s, similar to Chile and Peru. The worst are Paraguay and Brazil. The United States is pretty high on that measure too. The literacy rate is 86%. That's comparable to Jamaica and Belize. And one nuance to that is the difference between male and female. It's about the same. And then the maternal mortality ratio has improved from 190 in 2000 to 112 in 2020. So this is really encouraging because Guyana has managed to address these developmental factors before the flow of petrodollars. So the capital dimension is growth, and it's mostly quantitative. I mentioned the top line GDP growth rate. That's, hotel companies, airlines take measure of GDP growth and how many airport landings, how many number of people are flying to the country or on cruise ships. There is no cruise ship business industry today. So the first place to start is whether the country has foreign direct investment law in place, and indeed they do. The Investment Act of 2004 is the primary legislation in Guyana. It's pretty typical of what you'd find in any country: protections for investors, guarantees against expropriation, free repatriation of profits, and dispute resolution. International is the best flavor for that sort of thing. And the governing law for resource extraction is Petroleum Production Act of '86. That lays down guidelines for the royalty rate and just the basic terms for how a country would sign a production sharing agreement, which is what the country has in place today with a consortium led by Exxon. And indeed, that PSA conforms to what I found to be in that Petroleum Production Act There's an intermediate step happening today where companies gain exploration licenses. So that's happening now with exploration licenses being doled out for new blocks. But eventually those would turn into production sharing agreements. These are 20, 40-year agreements that define all sorts of terms for revenue sharing. Royalty rate here is 2%, which is pretty good for deeper water offshore. And the provisions for events of force majeure are in this contract. I wasn't able to read them, but they're there. So in energy, Guyana has discovered 11 billion barrels of crude. And the government revenue from domestic production is about $1 billion annually. And this is going to go to $7.5 billion annually by 2030. And then, like I mentioned, there are recent discoveries in other areas. But Guyana is forecast to produce 1.7 million barrels a day by 2035. Now, recall that global oil production and demand balance is about 103. So Guyana is likely to peak at 1% of global supply. That's excluding what may be discovered in these new exploration licenses, new areas. So this was going to propel the country to the 4th position on the list of the largest global offshore oil producers, exceeding the US, Mexico, Norway. That's big. This is the UAE type scenario. And the most compelling figure I found was that cumulatively by 2040, revenues are likely to total about $160 billion. That's to the country. Now that doesn't include, that's what the country will receive, but then there's going to be linkage effects to other industries, investors investing in the country, creating ripples of activity economically. So with hotel, tourism, and some others, with 106 billion in oil revenues so far, the government has launched infrastructure projects, including the construction of 12 hotels, 12 hospitals, a number of hotels, a lot of hotels, obviously, mostly urban, but that's likely to change soon. Scores of schools, 2 main highways, a new bridge, a deep water port, and what's likely to be a $2 billion gas to energy project that is expected to double their energy output and cut their bills in half. So another dimension you want to look at quantitatively is property rights. This is key to investors. So the Guyana Lands and Survey Commission is responsible for administering the land registry. The registry records ownership, boundaries, encumbrances. I've spent a lot of wonderful hours in various survey commissions and title registry offices around the country around the world, because perfecting security is key to providing financing and investment in countries. An investor puts money in, they want to take equity, and a lender would take a senior position on a project until the project debt is repaid. There's got to be a way to record a lien and enforce that lien in case the investment doesn't work out. By the way, I recently met with some lawyers in New York at Duane Morris that were more than capable of sorting through all these tax and legal aspects for foreign investment in Guyana and around the region. They were really impressive and vital. Like, lawyers, of course, are a vital part of doing anything in a country like Guyana. The tourism master plan from 2020 to 2025 is implemented by an arm of the government called the Guyana Tourism Authority. It's, from what I can gather, it's similar to what regional tourism authorities are. It's a collaboration of government agencies, private sector, local communities. Um, Last year, tourism revenue was over 120 million. That's an increase of 50% from 2019. By the way, these numbers, I did my best to check them, but some of that 120 million is likely to be business travelers. So, we're doing approximates here. And then a recent report by the Tourism Authority said there are 21 hotels under development in Guyana, expecting to add 3,000 new rooms to inventory. Majority are in town in Georgetown. And this is, the government's focus is on developing tourism in the city as well as accommodation for business travelers. So in 2023, the government allocated $5.7 million to tourism promotion. That's more than double from the year prior. I expect this to grow dramatically, and that's going to impact the Caribbean in general because, countries are competing for tourism dollars. And as Guyana expands its offerings in country, this budget is likely to increase. And finally, there is the country's sovereign fund. They call it the Natural Resources Fund. It's set up to mirror what other country sovereign funds have done. The most prominent is Norway's sovereign fund. That's the largest in the world. It's got like $1.3 trillion of investments. So what you want to see from this, obviously, is what they're doing. That's going to give you an indication of what their priorities are. But you also want to see transparency, annual reports, the management talking about trends and where they intend to allocate money. Because if there's 160 billion gross coming into Guyana in the next 30 years, that fund is going to be tens of billions of dollars. So they're investing it traditionally in financial markets like stocks and bonds to provide a buffer for the country to have a resource in case there's a decline or severe decline in oil revenues. But they're also investing in infrastructure projects, education, healthcare, roads, and some of the larger energy projects. So I've been part of investment where the local government is contributing a minority amount. And I got to tell you, it feels much better to have the government as a minority investor in a project. It's just, there's nothing as clean as having the government commit to making a project work. So that's what I've got. And I hope I covered enough territory and got deep enough to make an impact. So if there are any questions, please ask.
Yeah, and you can do in the chat or raise your hand and we can let you ask any questions. Simmons, are there any countries you would look at as a model for what Guyana can be, at least in the next 5-10 years, or any analogs for its development trajectory?
Yeah, I don't think there's no perfect analog. Every country struggles to allocate resources and drive development. That's the key for the government's responsibilities to drive development. It helps the country and it helps the investment backdrop too. But there's some huge failures related to what's called the resource curse. In other words, countries fail to convert resources, natural resource development into social, political, and economic development. And Venezuela is probably the best example. They have some of the largest oil reserves in the world, but the average Venezuelan has experienced just disaster since oil was produced 20 or 30 years ago.
One
So
question. Go ahead.
Finland is the model, really.
Mhm.
But it's a homogenous society. Guyana is not a homogenous society. It's got a varied community background, some Indians, some Africans. And so far, I think they've done a good job of making things work. I mean, it's never easy. But if they can stick to the long-term goal and just let those resources fund human development, it's going to work out fine.
A question in the Q&A just about what are some of the pitfalls that you think Guyana needs to try and avoid?
I mean, look, it's they are, if they don't make this work, it's their fault. Like, they are here to make this work. And as far as I can tell, in terms of the advice they got for negotiating the production sharing environment, production sharing agreement with the Exxon consortium that started in 2015, by the way.
Yeah.
That was a good deal, right? Guyana didn't put a dollar of money into that, and they were patient and let a massive amount of highly risky capital get put to work, and now they're um, benefiting from that path. And in terms of what I've seen from the Natural Resources Fund, it's the same, that they are promoting transparency. They're long-term investors in developmental projects in the country. I mean, these compound um, benefits to the country over decades. And so the energy investors definitely have a long-term um, incentive. That's the only way they can extract these resources. And if the government stays incentivized similarly, then it'll work.
Another question in the Q&A about the Venezuela problem. Without a crystal ball, I mean, how would you sort of evaluate what we're seeing the last few weeks coming out of Venezuela?
I don't know that there's any logic to apply to Venezuela. My guess is that um, the world, mainly the United States, but aren't going to just allow um, Venezuela to just take a huge resource like this. But I'm just guessing.
The question, obviously, obviously oil is the main attraction, but in the short term, before the attendant sectors start to grow, what would you say would be the sort of best opportunities for people looking to get in to that market right now?
So, look, the investment approach is different from what you do considering a new hotel in Atlanta. Obviously, there's a human dimension, and these kinds of things require boots on the ground. The pace of commerce is slower. I've never been to Guyana, but I'm familiar with the backdrop, because they're not familiar with investing in the method that we do. Like, $1 billion real estate project can get FID'd in 3 months. They're going to take years to do that, but that doesn't mean that the returns aren't there. So it requires some patience, some upfront costs, and development of resources, because the commercial analysis is the same once you um, tackle the political risk.
And I would also note that Guyana's tourism sector has always been very small, traditionally one based around ecotourism in the hinterlands or in the rainforests of Guyana. What we're seeing now, actually, a lot of the tourism growth you mentioned has been business travelers. You're starting to see airlift to Guyana out of places like Houston, Texas, which is not traditionally a city that sends a lot of flights to the Caribbean for beach vacations. So it's a very different kind of tourism development that we're going to see there too. And I think that's going to change the way people are investing in some of the hotels that are developing in the short term.
Yeah, I think I read that 80% of the country is forested. And this is
It's one of the most sparsely populated countries on the planet, actually.
that's right. So there's a pristine quality to the rainforest there. And look, the government's going to promote through traditional channels, but what's going to happen is business travelers are going to go stay in town,
Mhm.
and inevitably they're going to say, I want to get out and go on an eco tour in some rainforest for a weekend.
Yeah,
And they're likely to be super impressed, and they're likely to share that with other people.
precisely. Yeah, it's actually great if you're gonna start a tourism economy. Having business travelers is a pretty good way to do it, because they're
Exactly.
the best kind of pioneers for exploring that. Um, so, I guess anything you'd like to conclude with, or just to let people know as they consider the future of Guyana.
Well, look, there was a lot I didn't include. I just wanted to stay brief and extremely relevant. But I think, Alex, you're going to publish this on as an article with a link to
Yeah,
the
yeah,
video.
we've recorded this, so we'll have this as a
Yeah.
reference for anyone. We'll be publishing a story in the next couple of days, so you'll be able to refer back to this as well.
So in that article, I'll include links to some of the sources that I use to develop this, and some others too.
Terrific. Well, thank you, Simmons Chase, again for joining us and shedding light on this very mysterious and exciting new investment destination at the northern tip of South America. And thank you to all of our members for joining us. And we look forward to seeing you next time. Have a great
Super
day.
fun. Thank you.